Let us understand concept of working capital management. Let us take a generic hypothetical business situation and we'll be understanding the concept. Miss Rucha is planning to start a manufacturing unit of manufacturing and selling this pen. She will be manufacturing this pen in lots and she will be selling it in the market. She knows she will require a building where this pen will be manufactured in an automatic process. What is required is building. Building will cost her 100 lakhs rupees. She knows she will have to arrange this 100 lakhs rupees either from her own pocket or from bank or from any other sources for fixed capital requirement. She will also require furniture and other fixed assets of worth say 50 lakhs. So what is her total capital requirement is 150 lakhs. See what Rucha is planning. She is planning that she will borrow 120 lakhs from bank and she will be bringing her own capital of 30 lakhs. This is what is her plan. Everything is arranged. Bank is ready to finance 120 lakhs rupees. She is having her own capital of 30 lakhs rupees and she started a business. Assuming that by this 150 lakhs rupees, she will be easily able to manage her business. But she was wrong. Try to understand, this was day one of her business. Everything is invested, her office is ready, manufacturing plant is ready, everything is ready. But on day one, she got order to manufacture 100 of this pen. She will first have to purchase raw material. Let us assume for this point of time that she will have to pay cash for it. So there is a cash outflow. Let us not go into that numerical details, but let us take a ad hoc figure which is 10 lakhs rupees. So she will require now more 10 lakhs rupees because she has invested her own capital of 30 lakhs for purchasing building and furniture, and she has also borrowed 120 lakhs which is also used in purchasing that building and furnitures. And she now got that she will require some more money to run the business, not to purchase fixed asset, but to run for daily routine of the business. She will require capital. She will require capital for her daily working needs. She will require more money for working capital. See, there is a cash outflow today of 10 lakhs rupees. But there is no cash inflow as on today. It will happen, but it will not happen today. So, she has purchased raw material worth rupees 10 lakhs. She had got that working capital requirement of 10 lakhs rupees and try to understand this goes into automatic processing. But that goes into automatic processing on third day. Now she understood that this 10 lakhs rupees requirement is not of one day. She will have to borrow this 10 lakhs rupees for this period of 3 days. Because cash is already outflow. 3 days has passed, still raw material are not in production. On third day, say raw material are going into production, but still on the same day there will not be finished goods output. It requires more 4 days. This is 7th day. To manufacture pen from raw material. Tell me whether that 10 lakhs rupees which was invested in raw material is recovered or not. No, it is not yet recovered. But the problem is to manufacture these goods, there is some additional cash outflow. Of say 5 lakh rupees. So if there is an additional cash outflow of 5 lakhs rupees, still there is no cash inflow. So now there is an additional requirement of 5 lakh rupees. There is an additional requirement of 5 lakhs rupees, and yet in near future there is no sign that we are going to recover back this money. This 4 days practically you will require only 5 lakhs. No, more 5 lakh rupees. Original 10 lakhs was required. This 5 lakh is also required now. On 7th day you are manufacturing this pen. The pen is manufactured. Now comes the finished goods. The goods remain in your godown for 13 days. Please understand, my 10 lakhs rupees was already invested in raw material. My 5 lakh rupees is invested in electricity, workers, wages, all other overheads. 5 lakhs rupees is more invested. Nothing has came back yet. 13 days it takes to sell the goods. So the goods are not yet sold. If the goods are not sold, there will be no cash inflow. And it happens for 13 days. And then goods are sold. So total, now we have come to 20th day. Ultimately, 20 days have passed. My 10 lakhs rupees was initially invested, then again 5 lakhs rupees is invested. I am assuming go down is free of cost. Otherwise, I'll have to add some cost over here also and over here also. But for making it easy, I'm not adding it right now. Goods sold on 20th day, and goods are sold, and now it is a happy thing because we know that we are going to get cash. But debtors took a credit period of 15 days. Debtors credit period of 15 days. All my money which were blocked are still blocked. They are not recovered back. So the 10 lakhs rupees initially, and then 5 lakhs for manufacturing of goods, and then all other costs which are added, they are not yet recovered. And it is which day? 35th day. And debtors pay your money on 35th day. There will be cash inflow. Assuming you are selling it on profit, all your cost will be recovered, plus some profit will be also recovered, which will be you will be using for other purpose. But whole of your money, 10 lakhs plus 5 lakhs plus all other costs which you have incurred, will be recovered. For how many days money is required? 35 days. For how many days money is required? 35 days. How much required? Please, we cannot say 10 lakhs rupees is required for 35 days or 5 lakhs rupees is required for 35 days. Why? 10 lakhs rupees is required for whole 35 days. But this requirement came during this period. So this 5 lakhs rupees is not required for 35 days. It is required for less period of time. We are not doing exact calculation of how much is working capital requirement. I'm just explaining you concept. Miss Rucha thought that by taking out this 150 lakhs either from bank or her own capital, she would be ready to run her business, but she is not. She requires a 10 lakhs rupees on first day, and after third day, say fourth or fifth day, she requires additional cash of 5 lakhs rupees, which will be required for 35 days, and this requirement is termed as working capital requirement. She will require money to do this process. How many days it takes between cash outflow and cash inflow? How many days? 35 days. 35 days is working capital cycle. You invest your money in the business, there is cash outflow of the business, there will be cash inflow, and between that there will be 35 days period. You will be having cash outflow, you will be having cash inflow. So for this 35 days, you will be incurring cash, you will be incurring some cost. All the cost should be financed, and that financial requirement is termed as working capital requirement. Bank also gives loan for working capital requirement, which in technical terms is termed as CC or cash credit. Sometimes overdraft is also for working capital requirement. And this is how working capital requirement emerges. Rucha understood that she will require more than 150 lakhs rupees for running her business. She will require some additional capital, which will be termed as working capital requirement. Let us incorporate concept of creditors in this working capital requirement, and we'll see how it changes our working capital cycle. Please understand, here we are assuming that cash outflow is happening on day one. See, we have purchased raw material, but our creditors might give us some credit period. They are giving us 5 days for payment. 5 days for payment. So now my cash outflow will not happen today, will happen after 5 days, because creditor is giving me period of 5 days. So please understand, my cash outflow will happen after 5 days, and cash inflow from today, it will happen after 35th day. What is the gap? Gap is 30 days. So if creditors are involved, if creditors is giving you some credit period, it will reduce our working capital cycle. It was 35 days minus 5 days creditors period. And so 30 days is nothing but working capital requirement. Working capital cycle. So we have even understood how creditors will affect our working capital cycle. What is 30 days? My cash outflow and cash inflow, the gap, the period will be 30 days between cash outflow and cash inflow. Let us now understand, sir, that's whatever money, say XYZ rupees, whatever rupees I will require for 30 days, then that's it. The answer is no. Suppose this money is required, it will be required only for 30 days? No. Sir, then for 1 year? No. It will be required for unlimited period of time. Till the time your business lasts, this money will never come out of your business. It will always remain in working capital. How I'll tell you? This you will not do only one time. This will happen on a continuous basis in a cycle. You are purchasing raw material, producing finished goods, selling it. Now you will end? No, you will again purchase raw material, again manufacture the goods, again sell it, again you will purchase the raw material, and so only this is known as working capital cycle. So if my working capital requirement is say 9 lakhs rupees, this 9 lakh rupees will be required in current year, in next year, in next to next year, till the time your business ends. So only it is famously said, working capital is a cash outflow at the end of 0 year, that is today, and it is a cash inflow at the end of period, that is when business is sold, business ends, then only working capital will be recovered back. Sir, it will remain 9 lakhs rupees? No. As you increase the level of activity, as you increase the raw material purchase, you were manufacturing 100 pens, now you are manufacturing 1000 pens, more working capital will be required to be added to the business. That does not mean it will always remain 9 lakhs rupees. But this 9 lakhs rupees will never be recovered till the time you are increasing your activity. This is a working capital cycle. Working capital cycle is for continuous period of time. So Rucha, who is planning to manufacture this pen, will require 150 lakhs for purchasing fixed asset, fixed capital, and she will require 9 lakhs rupees more for working capital requirement. She'll ask to a bank that my working capital requirement is 9 lakhs rupees. Sir, how we have got this figure of 9 lakhs rupees? Still we have not understood. We will be exactly calculating also working capital requirement. But try to understand her working capital requirement. Let us right now assume is 9 lakhs rupees. What she will say to bank, out of this 9 lakhs, let me bring 2 lakhs rupees on my own. So whenever some portion of raw material is to be paid, salary is to be paid, electricity bill is to be paid, she will be paying on her own. And give me 7 lakhs rupees, which bank again is ready to finance. And please understand how bank will finance this loan. This type of loan is termed as cash credit. It works the same as overdraft. So understand, Rucha has purchased raw material today, but she will not require this 10 lakhs rupees today. Why? Creditors are giving her 5 days. Right? Creditors are giving her 5 days. So cash outflow will happen at the end of 5th day. So what Rucha will do, or what bank will do is, bank will give a limit of 7 lakhs rupees. See what bank is saying to Rucha, you can withdraw any amount of money from this CC limit. The maximum limit is 7 lakhs rupees. Whatever Rucha will withdraw, she will pay interest only on that portion, only for that number of days. So there will be a limit of 7 lakhs rupees. See what happens in a long-term loan, building loan, home loan is the cash is received as on today. If I take a loan, I'll be receiving money. This does not happen in cash credit. In cash credit, there is a limit. Whenever limit is utilized, the interest will be charged for that particular day. Rucha can withdraw 1 lakh rupees from this. She can withdraw 3 lakhs rupees from this. Whatever she withdraws on outstanding balance for that particular day, interest will be charged. This is cash credit or overdraft. This is how bank finances. This is her own money. And now she understood concept of working capital requirement also. She knows that she will have to bring her money, her own money for working capital, and she will again have to ask to bank to finance for working capital requirement. So long-term capital requirement, we know it is very easy to calculate. See, we are just doing addition. Working capital requirement, very difficult to understand. Even it is difficult to calculate. So when you are calculating your exact working capital requirement, see, if my answer is 9 lakhs rupees, believe me, it is possible that your answer is 9,50,000 rupees. It is absolutely possible. It is not fixed like this long-term loan. Difficult to predict how much will be my working capital requirement, because there are n numbers of variables by which we determine working capital requirement. Say my raw material cost today is 10 rupees. Because of inflation, it became 15 rupees tomorrow. My working capital requirement will automatically increase. So it does not even remain fixed. Today, if my working capital requirement is 9 lakhs rupees, it might become 9,20,000 rupees tomorrow. Right? So this is concept of working capital cycle, working capital requirement. You can bring your own money. You can take loan from a bank. Most relevant loan for working capital requirement is CC. CC comes in a limit. Whatever you withdraw, whatever business withdraws, they will be paying interest only on that amount. You can repay this money, portion of money, small amount of money in the CC limit any point of time. Whatever is the outstanding balance, interest will be levied on this outstanding balance. Let us now understand how to find out working capital requirement. We will have to exactly measure how much money will be required for working capital, whether we are financing on our own or whether we are borrowing from the bank, but we'll have to present that this is my working capital requirement. So we are measuring working capital requirement. A very broad method for measuring working capital requirement is this. What is my annual cash cost? What is my cost per annum? Say rupees 1 crore 20 lakhs. What was working capital cycle in our case? 30 days. See, I will be expending 1 crore 20 lakhs per annum, but our cash will outflow today. We will be getting back after 30 days. So same thing will not be required after 30 days. So what is my working capital requirement in this case? 1 crore 20 lakhs is for 360 days. What will be cash for 30 days? This will be 10 lakhs rupees. See, what does this mean? We will be having cash expenditure of 10 lakhs in the period of 30 days. We will be purchasing raw material, storing raw material, manufacturing it, storing finished goods. We will be selling it, giving debtors credit period, and will be receiving money after 30 days. Same money can be used to again finance that 10 lakhs rupees. So our working capital requirement will be only 10 lakhs rupees, which is for 30 days. After 30 days, we are recovering our cost plus profit. So same 10 lakhs rupees, the plus profit we are keeping aside, but same 10 lakhs rupees we can use it again. So our working capital requirement will not be 1 crore 20 lakhs, but it will be 10 lakhs rupees. Are you getting it? 0 day, we are having 10 lakhs rupees requirement. We purchase raw material, we manufacture goods, we recover money. It will take 1 month. After 1 month, we will be recovering 10 lakhs plus profit. This profit will keep aside, but this 10 lakhs rupees we can again invest in the business. for working capital. Again 10 lakhs rupees next month. Again 10 lakhs rupees next month. This will happen for 12 times. And we will manage this cost of 1 crore 20 lakhs rupees. So 10 lakhs rupees is our working capital requirement for 30 days. Don't write down now. There's a 10 lakhs rupees for 30 days. No, keeping the level of activity same, this is my working capital requirement throughout. So say in current year, our level of activity is going to remain this. Then 10 lakhs rupees will be sufficient for full year. If next year also we are keeping same level of activity, 10 lakhs rupees working capital will be sufficient requirement. This is broad way in which we find out working capital requirement. A detailed way in which we can find out working capital requirement in this manner. From balance sheet, we can take current assets. Please understand, balance sheet is as on 31st March, say 2023. What is the positions of assets and liabilities as on 31st March 2023? This information we can get from balance sheet of a company. In current assets, there are stocks of raw material, which is of 1 lakh rupees. Stock of WIP, which is of 5 lakhs rupees. And stock of finished goods, which is of 3 lakhs rupees. There are debtors of 2 lakhs rupees. For the purpose of making it somewhat easy, I am not taking cash balance. So stock and debtors are totally this. This is the position as on 31st March. And there are creditors on current liability of 1 lakh rupees. How I find out working capital requirement? Try to understand. From seeing this, I know that 1 lakh rupees is blocked in my raw material as on 31st March. 5 lakh rupees is blocked in my WIP as on 31st March. This money are not recovered. 3 lakhs rupees in finished goods and 2 lakhs rupees respectively in debtors are blocked into my business. They are not coming back right now. This will reduce my working capital requirement. So what I do? Current assets. How much money is blocked? 5, 6, 9, 11. 11 lakhs rupees minus current liability 1 lakh rupees. 10 lakhs rupees will be my working capital. So all current assets, we have not taken cash in this case, but all current assets block my capital. All current liability will reduce that requirement. So current assets minus current liability is also working capital requirement. Try to understand what we are assuming. The raw material stocks on an average remains 1 lakh rupees throughout the year. So as on 1st April also it will be 1 lakh. As on 5th April also it will be 1 lakh. And it remains same. How it can remain same? There will be raw materials which will be going into production. There will be raw materials which are purchased. So we are not talking about stock. We are talking that this is nothing but average stock. So average money blocked in raw material throughout the year is 1 lakh. Average money blocked in WIP throughout the year is 5 lakhs. Average money blocked throughout the year in finished goods is 3 lakhs. In debtors is 2 lakhs. And so total current assets comes to 11 lakhs. Let me take even cash over here. Say cash was 50,000. When this money is going to come back, say in a business, there will always remain a cash balance in your cash box. It will never be empty. So what does this mean? This money is also working capital. It is a requirement for the business. You will have to keep cash in the cash box, and that will increase your working capital requirement. And so your working capital requirement will be 10.5 lakhs. All current assets minus current liability is working capital requirement. We have taken a base that everything that is on 31st March is an average. Ultimately, it is actually a closing balance. But we are assuming, say if raw material is of 1 lakh rupees, as on 31st March, this is my average raw material balance. Most prominent way of doing it is this. We will be finding out working capital requirement for the purpose of raw material. We will be finding out working capital requirement for the purpose of carrying WIP, for finished goods, and credit sales, which is nothing but debtors. And we can forecast cash requirement separately, add it, and we'll be getting working capital requirement. How to find out working capital requirement exactly for carrying raw material? Try to concentrate. In a year, you are consuming, say, 12,000 units of raw material. This 12,000 units of raw material you are not going to purchase today because it is requirement per annum. The price of the raw material is 10 rupees per unit. And now most important thing, how much raw material stock you keep. You keep 1 month raw material stock, 2 months raw material stock, 3 months raw material stock in your godown. How much raw material stock is on an average in your godown? Say it is of 1 month. Into 1 divided by 12. This will be nothing but my raw material requirement for working capital. Please understand, this is not total working capital requirement. This is money required to carry your raw material. You'll have to keep raw material stock. It is inevitable. You will require this much money for your raw material. Let us first find out the answer. This is 1000 into 10 is rupees 10,000. This is my raw material requirement for this particular unit. Try to understand even logically. What is your raw material requirement consumption per annum? Is 12,000 units. Into 1 divided by 12 is nothing but 1 month stock of raw material which you normally keep in your godown. And what will be that answer? 12,000 into 1 divided by 12. That is nothing but 1000 units. Please try to understand what is this. It is average stock of raw material in your godown. But we are right now talking in rupees, not in units. So multiplied by 10 is rupees 10,000 is nothing but your raw material working capital requirement. Try to concentrate. This is rupees 10,000. What is my WIP working capital requirement? Let us do it separately. My total consumption or total WIP cost See how we will be finding it out. Say this all 12,000 units are manufactured in a year. There was already a raw material cost of 10 rupees. ₹10 a raw material cost was there. Plus There will be other manufacturing cost, which is 30 rupees. Let me skip this. So total cost of WIP is nothing but 40 rupees, or total cost of manufacturing is nothing but 40 rupees per unit. But this is total cost per annum. How many months is your WIP stock? Is say 2 months into 2 divided by 2 months is into 2 divided by 12. I will be getting WIP working capital requirement. To carry on my process, I will be incurring cost, but I'll not be receiving money. During that period, there will be money requirement, which is nothing but WIP working capital requirement. Let me first find it out. I'm not finding it out because I need to do this. But try to understand this. 12,000 units into 2 divided by 12. Again 1000 units. This is nothing but WIP stock. Please understand that WIP work in progress are not 100% complete. So I should not be taking this 100% of cost. So I need to decide how much percentage it is complete. As far as raw material is concerned, normally in the business it will be 100% complete because the raw material are introduced and then manufacturing process is done. In majority of cases, there are processes where raw material is also introduced in phase manner. In that case, the calculation would be somewhat different. But let us assume that raw material is 100% complete as far as WIP is concerned. WIP only on an average is 40% complete. So this 1000 units are only 40% complete. So we should not consider 100% of 40 rupees. What we should consider? This 10 rupees full plus only 40% of this 30 rupees, that is 12. And so we should consider WIP cost of 22 rupees only. So multiplied by 22, this will be 22,000 rupees. This answer will also be 22,000. Let me prove it. This will be 12,000 into 22 into 2 divided by 12. It should be 40. Okay, this will be 2000 units, right? It is 2 divided by 12. So this will be 44,000 rupees. In the process of verification, we got our correct answer. 12,000 into 22 into 2 divided by 12 is 44,000 rupees. This is my working capital requirement to manufacture the goods. During the process, there will be cash outflow, but there will be no cash inflow. We will be having a working capital requirement of how much? 44,000 rupees. A good point to consider over here is this. Sir, are we not considering this 10 rupees 2 times? In raw material requirement also we have done it. In WIP requirement we have also done it. So are we not considering it 2 times? So we are not considering it 2 times, and so our answer is exaggerated. The answer is no. Try to concentrate. When we purchase raw material, there is a cash outflow. For that cash outflow, we have not yet got cash inflow. Now it will become WIP. Still, we have not recovered that raw material cost. Raw material are still in process. There is no cash inflow from raw material. So when it will be cash inflow? When we realize from debtors. So still money of raw material are invested in WIP also. So we should consider this 10 rupees. This 10 rupees are not yet recovered. We are investing more 12 rupees during the process of WIP. So we should consider 10 rupees plus 12 rupees. This raw material cost we should consider up till what time? Till the time the money is fully recovered from debtors, we should continue considering this 10 rupees. Believe me, this 10 rupees will also come in debtors, right? So this is my WIP. Let us go to finished goods. Finished goods working capital requirement. How much goods we are manufacturing? Let us assume 10,000 units only. What is raw material cost? 10 rupees. What is manufacturing cost? 30 rupees. And now I need to take 100% of 30 rupees because we are talking about finished goods and not raw material. What is the period? 1.5 months divided by 12. Say 1.5 months is nothing but finished goods period. What is this period? The goods are processed. It will remain in go down for 1.5 months till the time they are sold. So during that time, our money is invested. This 30 rupees and this 10 rupees. See again raw material. This money has not yet come back, so it will again come in this 10 rupees plus 30 rupees into 1.5 divided by 12. What is it? 10,000 into 40 into 1.5 divided by 12. That is rupees 50,000. Logically try to concentrate. 10,000 units you are going to manufacture in current year. 1.5 months stock is always in the go down. See, 1.5 months stocks basically means every time your average stock in go down will be of 1.5 months usage or production. So 1.5 divided by 12 will give you stock of 1.5 months, which is nothing but we are having not 10,000, 12,000 units. 12,000 into 40 into 1.5 divided by 12, which is 60,000 rupees. This is also 12,000 units into 1.5 divided by 12, that is 1,500 units. What is this? Stock of finished goods. We are not here to find out units, we are here to find out rupees multiplied by 40 rupees. These goods are worth 40 rupees. It includes raw material cost, yes. 60,000 will be my working capital requirement. Sir, we are considering this 10 rupees again? Yes. Why? Because still raw material are in our stock. How raw material are in our stock? Raw material were converted into WIP. Now that same raw material is converted into finished goods, but we have not yet realized our money. So if someone says that what is my finished goods working capital requirement, does it include raw material? The answer is yes, right? This is rupees 60,000 finished goods working capital requirement. We are assuming there are no other selling and distribution cost happening, and we are going to debtors requirement. Try to understand. We have manufactured this 12,000 units at the rate of rupees 40. Now you understand it includes, now it will include raw material as well as manufacturing cost, also selling and distribution cost, but right now we are assuming selling and distribution cost is 0, and this debtors are there for 3 months. Try to understand. Normally in accountancy, debtors are valued at cost plus profit because we need to write down in our balance sheet. But what is good idea in financial management? You consider debtors at cost, a new concept. Debtors are normally shown in your balance sheet at selling price. But right now we are doing debtors at cost. Because we don't require our profit, or our profit is not our cash outflow. So we take this as cost. If there was a selling and distribution marketing cost, we would have added it. But in this question, we have assumed it is 0. 12,000 units into 40 into 3 divided by, which is rupees 1,20,000. Try to understand this. 1,20,000 units into 40. 1,20,000 units into 40. What is this? This is cost of credit sales per annum. What is this? It is 4,80,000 rupees. Let us assume credit sales. It is at cost, but assume these are credit sales or cost of credit sales per annum. How much money will be in debtors? Try to understand. At any point of time, we would not be having 3 months sales in our hand. This is 1,20,000. Now what is this? I'll explain you in detail. Try to concentrate. If you see at any point of time, say this is November, December, January, February, March. This is 31st March. This is 28th Feb. This is 31st Jan. This is 31st December. And this is 30th November. All the sales of December. This is the month of December. All the credit sales of December. When you will be recovering your money back? In Jan, Feb, in March? These are recovered. For the month of January, this is credit sales of January. When it will be recovered? In April. Let me write down more number line. This is January, February, March, April, May, June, July, August, September, October, November, and December. Try to understand. January credit sales will be recovered in February, March, and April. February credit sales will be recovered in May. March credit sales will be recovered in June. April credit sales will be recovered in July. Let me take one date and decide how many months credit sales will be outstanding. Let me take this date, 31st of May. 31st of May. How many months credit sales will be outstanding? See, in May, we have already received this money, right? In April, we have received this money. So on 31st of May, this date, which all months sales is outstanding, credit sales, payment is yet to be received of May, April and March. February is not pending. Why it is not pending? Because February money we have already received in May. January money we have already received in April. So which all months sales is outstanding? 3 months sales is outstanding. What is the total sales per annum? 4,80,000. This is cost of sales. Then what is my 3 month sales? How we have done it? If 4,80,000 is sales for 12 months, what is a 3 month sales? What we are assuming? Sales are evenly distributed throughout the year. 4,80,000 into 3 divided by 12. I will be getting answer of debtors throughout the year. Even if you will see what will be outstanding as on 30th September, I will be getting same answer. Which all sales will be outstanding? September, August and July. This 3 month sales will be outstanding. So we are assuming every month sales is same, and so we can directly do into 3 divided by 12. This is what we do to find out debtors at cost price. Sir, can we find out debtors at selling price? Yes. Instead of 40, take selling price. You will be getting debtors at selling price. In working capital management, it is good to take debtors at cost price, which is 1,20,000 rupees. So my debtors working capital requirement is rupees 1,20,000. How I will be finding out my working capital requirement? Total of 10,000, 44,000, 60,000 and 1,20,000. This is 1,04,000, 1,14,000. 1,14,000 plus 1,20,000 is 2,34,000 rupees. And please understand, this is not for 1 month, 2 months, 3 months. This is my working capital requirement throughout. Till the time my level of activity remains same, my working capital requirement will be for 2,34,000, 10,000 to carry my stock, 44,000 to manufacture and keep my WIP, 60,000 to store my finished goods. There are always cash outflow, but yet the cash inflow has not came, and 1,20,000 to carry my debtors. See, when I speak carry my debtors, means we are not carrying our debtors. This money are blocked, and for that blocked money there are cash outflows continuously, but this money is blocked for how many, for what purpose? The debtors purpose. And my total working capital requirement currently comes to 2,34,000 plus. See, I need to keep a continuous money in my cash box. Every day I cannot keep my cash box empty. See, if you go to a Reliance Mall or any other retail outstore, you will see if you are a first customer, still that person is having some extra cash. That is the requirement for the business. And what is the requirement over here is, say, 16,000 rupees. This is nothing but total of my current assets, which is nothing but 2,50,000 rupees. I need to reduce my current liability. Let us assume only purchase. So let us go to creditors. How to find out creditors? In that second method, we were directly taking figure from balance sheet. But here we can directly do this. Credit purchase in units. See, let me assume it is 12,000 units of credit purchase only per annum. Multiplied by, now you cannot take manufacturing cost, you will have to take only raw material cost. You purchase raw material from your creditors, which is 10 rupees. You need not take total cost. How much a time period creditor gives you? 2 months into 2 divided by 12, which is the 12,000 into 10 into 2 divided by 12, which is 1,000, I think 20,000 rupees. Let me find it out. 12,000 divided by 12 is 1,000 into 10, 10,000, 20,000. So logically, what is this? This is credit purchase per annum. But full credit purchase is not your creditors. The creditors are only of 2 months. Same logic will apply. At any point of time, 2 months will be outstanding. As on 30th August, the money of August and July will be outstanding. As on 31st December, money for December and November will be outstanding. Again, we are assuming purchase is spread throughout the year. Means every month the purchase is equal. And so we can directly do, if 1,20,000 rupees is a 12 months purchase, what will be 2 months purchase, which is 1,20,000 into 2 divided by 12, which is nothing but 20,000 rupees. Creditors reduces our working capital requirement. Why? It delays our cash outflow. So 20,000 will be reduced from it, and my working capital requirement will be 2,30,000. See, I have estimated this all things, and sometimes I put in contingencies that I need to store raw material for a long period of time. There is delay in production. This all are contingencies, and for that contingencies, I add 10%, which is 23,000, and I can forecast that 2,53,000 is my working capital requirement. Sir, if my raw material period changes, then my working capital requirement will change. It will not remain fixed like our fixed assets. This is another method for finding out working capital requirement. So total, in all, how many methods we have learned? Number one, by taking directly our cash requirement. A very broad manner, total annual cash outflow or cash expenditure into working capital cycle divided by total. I will be getting working. Number two is directly from balance sheet. Rather than finding out average answer, directly take what amount is invested in raw material, WIP, stock, debtors, cash as on 31st March. See, it will give you a good idea. Whatever is invested on 31st March is normally going to remain same. Your raw material stock is normally going to remain same, whatever it is on 31st March. If your debtors are of 3 months and it is 2 lakhs rupees, then 2 lakhs rupees is going to remain outstanding throughout the year, if you keep same level of activity and your credit period remain 2 months. Similarly, of creditors. And third way is in detail finding out working capital requirement for raw material, WIP, finished goods, debtors, cash requirement, reducing all current liabilities will be getting, adding some contingencies will be getting working capital requirement.